the decent move right now. Our market master of the day is Mihir Vohra, Director and Chief Investment Officer at Max Life Insurance. Mihir, good to have you with us here back in the program. Thank you very much for your time. It's earnings season, so I think we should start there in terms of what your assessment of earnings so far have been. Broadly, not too bad, right? I mean, actually, banks have reported pretty solid numbers. The rank and file are yet to report. Large segments outside of top tier IT and large banks, etc. So we're still awaiting those numbers. But first impressions right now.
Hi, good morning. Yes, overall, at least the large caps which have reported so far in technology, in oil and gas, even in some of the financials, all of them have reported decent numbers. So I don't see too much of an issue. And hopefully, with commodities prices coming off in the following quarters, we should see some of the discretionary and FMCG names also kind of show improvement in margins. So I guess the worry will not be so much on the margins going forward. We'll have to now see how the top line goes for most of these.
Okay. Mihir, hi. Welcome to the show. Thanks for joining in. Wanted to talk about a couple of spaces, right, that are hot topics right now. One of them, of course, is autos, where demand has come back in a big way, but some pockets like exports are still under quite a bit of pressure. So in that context, what do you do with names like, say, a Bajaj Auto, which have already given you 20% returns this year? Do you see more upsides here?
Autos, I would say, it's still a mixed bag. While we see some amount of pent-up and low base effect in the two-wheeler segment, the passenger vehicles, which is the car segment, still is a question mark. We'll need to see this month's number. And initial indications are that there is some slowdown in the overall discretionary spend, whether it's in auto or even some segments. So I'm a little bit cautious about consumptions compared to, say, a couple of months ago.
All right. Hi, Mihir. Good morning. Thanks so much for joining in. Mihir, from the banking pack, we're still some distance away from the fresh all-time highs, but that's where the street is very, very bullish on. How would you approach this space? Would you go for the large private sector banks, or would you still find some valuation comfort on the PSUs?
I think it can be mostly the private sector banks, and even some of the NBFCs are now beginning to look interesting at these valuations. So I think we should look not only at banks in the private sector, but also the private sector NBFCs. And public sector, I would still stick to the top few, not really go down the curve. But I think as far as the results is concerned, it's been a great season so far. Most of the results in the banking space have been quite encouraging. And I don't expect any major negatives as far as the asset quality is concerned, even for the coming quarters. So I don't think asset quality is going to be an issue. We just need to monitor the margins because interest rates have gone up, RBI has taken rates up, and we are seeing a fight for deposits between all institutions, whether it's public or private sector banks. And of course, we also should see any signs of moderation in credit demand. So I think asset quality is not going to be the monitorable for the next few quarters. It's mostly going to be margins and top line.
Okay, margins and top line. Mihir, pharma is another space which has seen lots of deal activity. I mean, actually, this year so far, that's the only space which has seen lots of deals, in the private space and in the public space as well. Any thoughts here? We had Naren some time back who joined us, who, of course, looks at, sort of sectoral weights within the broader market, and when they get to extremes, he makes a call whether they're attractive, etc. He deems them attractive. And recently we've been hearing some positive voices that perhaps generic companies, etc., will start to see some relief. Stocks like Aurobindo in the last 1 month have done well. Do you like any of those? Have you bought any of those recently?
So in pharma, our preference is more towards the domestic market, because that's where you have some pricing power and branding benefits, distribution benefits. As far as the US market is concerned, the call every year is whether the worst of the generic price erosion is over. And while we have seen some moderation in the rate of decline, which is decline in the rate of decline, but it's too early to say whether the worst is over. So I would still stick to the more domestic-oriented players.
All right, you would stick to the domestic-oriented players. I wanted your thoughts particularly on IT. Do you think the worst is over for the IT space? I ask because, some of these companies have indicated that the client spends have not moved as much as perhaps what the fear is in the market. And numbers have also been good in the mid-cap IT space. You think the worst is over?
No, probably not, because we are still not probably the past. We are still probably not past the sharpest US recession quarter. So you might see some more deceleration in US corporate spending, retail spending, etc. So maybe things get a little bit worse before they get better. So I would be more cautious on US tech spending and by corollary the Indian IT services space.
Anything you're getting excited about, Mihir, lately? Any space?
We're sticking to the same themes, which is domestic overall doing better than the global, especially government capital expenditure should continue very well in the election year. So all the construction companies, defense, make in India specific like chemicals, etc. So overall, I think domestic doing better than normal than the global, and government support to some of the sectors like defense, railways, etc.
You know, but does railway gel with that broader theme that you're talking about? I mean, stocks are flying. The problem with some of these sectors is that if you've tracked these things long enough, last 15, 20 years, it almost is a blind spot, right? Because for so long, these stocks don't do anything. You know, they rally once a year and then they go back to being, and then something changes. And it's kind of hard to get your, get your head around that, well, it is changing and it is for good now. I'm assuming it's a problem many investors face, but the rallies are very, very large now on these names. What's your sense?
Yes, so because, after a long time, the government has made it very clear that we are going to spend a lot in these two areas, apart from infrastructure and road building, which has been the focus area in any case. But defense and railway spending has actually gone up. Indigenization is going up. And there are clear guidelines and steps being taken to procure more and more locally. So it can be a longer-term theme after a long time.
What about real estate? Everyone's talking about it. After a 7-8 year down cycle, finally real estate is coming out of the woodworks. But that's on the residential real estate market. What about the stocks? Do you see more valuation and growth upside?
I think so, because if we are talking about India, which has to grow at more than 6.5%, if you have to go to 7.5%, it cannot happen without real estate and construction and infrastructure. So for the next 5 years, if we do believe that we'll achieve anywhere close to 6.5-7% growth, then real estate demand will go up, both on the residential side as well as the commercial side. So it can be a long-term theme, and stocks are not that expensive in terms of valuations.
All right, Mihir, what about these new age themes? One stock that's making fresh 52-week lows is, Nykaa. I think we should pull up the chart out there, and that was one of the few profitable ones that we were talking about just a year or so ago. What's your view on these themes, and are any of them coming to the value zone, or are they still very far away from it?
I think, new age is a very broad area. We are looking at it on a case-to-case basis. So we do have exposure to a couple of names, but not in the retailing space. It's more on the insurance space, etc. So we are taking it one stock at a time, looking at the franchise values, the customer base, etc. for each particular company, and then taking a call. Not really painting the whole new listings in the last couple of years with the same brush.
All right. Thanks a lot, Mihir, for joining in. Have a great day. We will speak to you again very soon. The market is quiet. It's not doing too much. But yes, the bias is on the downside. So the mid-cap index is down 120 points. The bank nifty is down almost 200 points. So it doesn't look like it's a good start for the